Good morning. Welcome to FX Bootcamp. Let me remind you that the purpose of FX Bootcamp is education. This is not an alert service. I'm not here to make trade recommendations. But I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Now, trading and investing is risky business. We know that. That's common sense. But what is uncommon is the high level of leverage that Forex offers you. As an amateur trader, once in a while you may get lucky and the leverage will work for you, but more often than not, it'll work against you. Therefore, the coaching staff at fxbootcamp.com recommends you do not trade real money until you have established a track record of success using a demo account. However, demo accounts include things like price and time data, but they do not include things like greed and fear, which are real-world risks to a currency trader. Therefore, once you do decide to trade real money, stay small, stay humble, because you want to remind yourself your success in your demo does not guarantee future results. And never, ever, 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 ever resort to gambling by risking money you cannot afford to lose. Like I said, stay small, stay humble, focus on the long term, and you should be fine. So how you guys doing? Everybody fine? Everybody in the cheap seats okay? All right. Yes, if you're watching this during a recorded video, just remember you can come to fxbootcamp.com anytime and attend these recordings for free live. So in any case, I want to start with Kiwi again because it's been like the 27th day in a row that the Kiwi's been unbelievably strong. Kiwi right now, 8.0. So I'm looking at my relative strength indicator. If you like this template, it's available on fxbootcamp.com for free, easy download. In any case, look at this, Kiwi 8.0, Aussie 8.2. Holy crapola, that is unbelievably strong. All right, unbelievably strong. And then look at dollar, USD 1.0, pathetic. So, what is going on right here? Seems like risk on. Is it risk on? I don't know if it really is. We'll have to take a look, but Aussie and Kiwi being strong, those are commodity plays. But CAD is sort of mediocrely strong. It's just barely above neutral, huh? Yeah. And then it's usually when there's risk on, yen is weak, but yen is unbelievably strong. So right now it looks like it's simple dollar weakness. Euro essentially neutral, pound a little bit weak, but the news to use right now is Asia's on fire, and the buck is worthless. So what's going on here? QE3 announced. Looking at the overnight news, Zoo terrible. All right, terrible numbers out of Europe overnight, just ugly. And then British CPI inflation stuff ain't bad. Yeah, Ruby says speculation about QE. Yeah, very very much possible, but I'd like to have some proof first. You know what I mean? So anyways, let's just quickly take a look around the world. Global stock market, bada bing, bada boom. Nice recovery for ASX out in Australia. Remember, it was down near four grand. Now it's 42, which is all good in the hood. How about Hong Kong? Remember, we set this up for a 382 retracement. Hey, look, a 382 retracement. I think it could still get up to more like a 50%, and then it may be come on back down. So a little more room perhaps, but that's a nice start for a setup for Hong Kong. The DAX here out in Germany, back to the gap. I'm going to move this. Okay, there's the gap from Sunday. So we filled the gap and then went back to the top. Now not sure what to do. Keep an eye on that, about 63 on the DAX. Okay, how about the FTSE? The FTSE at its 55-ish area, you know, we have that as resistance. Let's go back a little. We've got a lot of trend lines going on here. So, hard to make a call on this one. All I'm really doing is trying to see if there's a true recovery, or if, you know, if we have a one-off up day in a longer-term downtrend. S&P 500. Okay, check this out. Bada bing, bada boom. That's going to be an issue up in there. Okay. But currently, you know, made its higher high. Okay, there's a short term. Bada bing, bada boom. I'm gonna mark this. We'll see. I'm not drinking the Kool-Aid yet as far as QE. Okay, remember the Fed's not going to freak you out and just suddenly announce QE3 without unbelievable reason. And what I've been saying for the longest time is I believe it'll come out more like either a central bank coordinated move around the world. We're not quite there yet. There hasn't been, you know, sort of the Greek exit the euro situation, so I don't think that's called for quite yet. And the other situation where QE3 comes out is a Bernanke put, and that's only going to happen if the stock market is crashing, you know, 500 points in a day, 2 days in a row. You know what I mean? Like, we need, it's velocity that I think is important. You know, and I don't think any of that is even realistic till 10,500, which I've been talking about since April. So, you know, we're on our way to July here. So, I think all this, you know, worry about QE3, you know, I have to watch the data, which is most important, but I don't expect anything to change fundamentally until, you know, the end of summer, and I've been saying that for a long time. So, you know, if people are front-running QE3 now, I think they're way ahead. I think they're way ahead. But, you know, I guess that's why they're doing it. They're just doing it 6 months early. But anyways, we'll pay attention. You know, I like to believe we're the smart money. We don't just jump in because of a gut feeling, you know. So anyways, a little bit of a bouncy bounce, but it seems to me most of these stock markets, even though they've retraced, they're still range-bound and really at resistance. Quick take a look at commodities. Okay, see Dow in our roll reversal area here near some weekly pivots and stuff, so we've got to be careful there. Dollar's coming down though, huh? Yeah, dollar is coming down. Step back a little bit, and I think we should mark this as support. But notice what's happening here, right? Down, 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 up into the weekly central pivot point, not the monthly. So it's playing the weeklies here. Okay, very interesting, huh? The dollar index is following its weekly pivot points perfectly. Overlap here. Check this out. Weekly M1, which is the conservative target for the week, but it's also monthly S1. All right, so that's where I'm thinking we're bouncing. Okay, we might be on our way there, which means we could have 2 more days of dollar weakness, and then we're probably going to bring it back. Don't want to, you know. So let's just keep an eye. If it wants to fall, it'll fall. If it wants to bounce today, it's probably going to double bottom. I don't see it pivot-wise or EMA-wise that it needs to, but it could just bounce into here. We'll see. Notice that the cycle has been completed. The second cycle is a sort of a 2-bit cycle. And then how's our friend oil doing? Did you guys read that blog post I made last week about we're beyond peak oil? We have more oil in inventory than we've probably ever had since World War II. I'm guessing on that one, but You know, if you look at the average stockpile of oil over the many, many, many years and decades, you basically can create a range by looking at two standard deviations. I'm not sure how the government does it, but they create a range of normal. You could have low normal, normal normal, and high normal range of stockpiles of oil for each month of the year. So there's a natural cycle to oil inventories. And we're way, way, way beyond the high end of the average. We're way out there in the stratosphere. There's way more oil stockpiled than we need. That's one of the reasons why oil prices are low. So we want to keep an eye on that. June 1st is traditionally the top anyways. So I would expect oil inventories to start coming down. But if our economy is bad and factories aren't moving, building product, then we might, and Americans don't feel like driving around this summer, then oil prices will continue to come down. Okay, so supply is not an issue. So I think the only way oil prices can go up is some sort of geopolitical risk. Okay, supply is very, 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 very high, and demand, since our economy is slowing down, is probably going to weaken. Okay. Interesting, right? So that's where you want to watch, Norway and Canada. So let's go to Aussie dollar, and then we'll leave it for that on the video. And you don't want to do Aussie yen, obviously. Why am I so slow? There it is, right next to my mouse. Let this catch up. Okay, we just hit the target for the day. So even though Aussie's been very, very strong overnight, going into New York, we have to be looking for at least a mean reversion here, right? Okay, so we've had this nice run. Everything looks up, right? But like I always say, look, if you wanted to buy it, why didn't you buy it down here? I mean, that's why we use moving averages, right? 21's above the 55. 55's above the 200. Everything about this is bullish. That's a beautiful fib. Waits for the EMAs to kick up and stuff. So we might have hit the target for the day. So at least look for a mean reversion. And 15 minutes way, way, way overbought. Okay, so it's one of these situations where it's tough. We're looking at one of the strongest currency pairs, probably the strongest currency pair we've had overnight. Once again, going into New York, that might change, and that's going to be difficult for us because we're probably going to have a short-term trade down, and then it's probably going to come up and maybe double top, maybe get to R2, and then then we're going to look like that. So for the next couple of hours, in the live trading room with all the premium members, we're probably going to look for a short-term short, short-term long, medium-term short, short-term long, long-term short. Yeah, love that kind of trading. Yeah, difficult, huh? So anyways, that's what we're going to do. That's what we're going to do for the next few hours. Like I said, if you're watching this in the video, you should attend live. Join us at fxbootcamp.com.